Hello, everyone. My name is Mo Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another exciting income pick. If you want to read more about what John writes on a regular basis, you can head to incomeinvestors.com. You can find the link to the website in the description below. Things are looking up for today's ultra-high yield income pick, Braemar Hotels and Resorts Inc., traded on New York Stock Exchange under symbol BHR, a real estate investment trust with portfolio of luxury hotels and resorts. It's been a long time coming. The hospitality industry was hammered during the health crisis of 2020. The industry hit its low in February of 2021 with occupancy rate of 41.1%, average daily rate or ADR of $95.32, and generating revenue per available room or Rev PAR of $39.16. Fast forward to today, the industry is approaching pre-pandemic levels. National occupancy across all chains stand at 63.3%, while ADR has reached $151.13 and resulting in an overall RevPAR of $95.32. Despite all the great data, investors aren't yet willing to step back into hospitality industry or trust the strong industry tailwinds just yet. The broader REIT hotel and motel sector is almost down 14% over the last year, while the S&P has rallied 21.5%. And while not all REITs are created equal, management at Braemar holds that its portfolio is well positioned to outperform in both the near and long term. And that should help convince even the most bearish investors. John?
Yeah, thanks, Mo. Braemar Hotels is a REIT focused on investing in luxury hotels and resorts. Its portfolio currently includes 16 hotels. 10 are resort hotels, while 6 are urban or found in major city centers. Its top 5 properties by total 2023 revenue include the Ritz-Carlton Sarasota, the Ritz-Carlton Reserve Dorado Beach, Ritz-Carlton St. Thomas, and Four Seasons Scottsdale and Capital Hilton. Some of the other properties people might be familiar with include Cameo Beverly Hills and the Ritz-Carlton Lake Tahoe.
Resort hotels continue to outperform pre-health crisis levels.
Yeah, for the fourth quarter ended December 31st, 2023, Braemar Hotels announced that revenue increased 3.4% to $177.5 million. Net loss was $31.1 million, or a loss of 47 cents per share. Adjusted funds from operations was 4 cents per share, while adjusted earnings, this is a mouthful, before interest, tax, depreciation, and amortization, and gains or losses from sales of depreciable properties, or EBITDA, inched lower to $37.4 million. Full year revenue climbed 7.7% to $739.3 million, with a net loss of $1.15 per share. And adjusted funds from operation were 61 cents per share, while adjusted EBITDA climbed 3% to $176.7 million.
This company declared a cash dividend of 5 cents per share.
Yeah, in April, Braemar Hotel and Resort declared a quarterly cash dividend of 5 cents per share, or 20 cents per share on an annual basis, and that works out to a current yield of 7.94%. Now, like many hotel REITs, Braemar's dividend was suspended during the pandemic. That shouldn't be a big surprise. Before the 2020 health crisis, Braemar's quarterly dividend actually stood at a pretty healthy 16 cents per share. It reinstated the dividend in the first quarter of 2022 at 1 cent per share and raised it to 5 cents per share in the fourth quarter of 2022, and it has held it at that payout level since then.
I'm just looking at the stock chart. I noticed that BHR shares recently popped off 4-year lows.
Yeah, suffice it to say, the emergence of the 2020 health crisis and the suspension of its dividend didn't exactly help BHR stock. From the start of 2020 through March 19, 2020, Braemar's stock crumbled almost 90%. BHR stock staged an early comeback in late 2020, but it's been pretty choppy since then, and it is yet to return to its pre-2020 health crisis levels. Over the last 3 months, though, BHR stock is up 40% and 18% over the last 3 months.
And why the big move?
I think it's the result of the prospect of falling interest rates, which would mean borrowing costs decline and margins improve. Now, well-heeled REITs can take advantage of more favorable financing terms to expand their portfolios, acquire new properties, and refinance debt. And Braemar has actually done all of that. Recently acquired the Ritz-Carlton Reserve Dorado Beach and the Four Seasons Resort Scottsdale at Tune North, and recently financed or extended almost all of its 2024 debt maturities. It also expects a more favorable refinancing environment going forward, which is expected to reduce the company's interest expenses on these and future financings.
John, thanks for your analysis. Just to recap, Braemar Hotels and Resort is a REIT that has made big moves since the sector was gutted during the health crisis of 2020. It has high quality assets with high barrier to entry. Its portfolio, ADR, and RevPAR are well above pre-pandemic levels, and occupancy levels have stabilized. Urban properties are nearing full recovery, while resort properties are up significantly from 2019. This helped Braemar Resort report solid fourth quarter results, with management noting it signals potential for a steady recovery. To that end, it announced major 2024 capital expenditure of $90 million to $100 million. After a quiet 2023, look for Braemar to move more aggressive in 2024. In the recent interview with company CEO Richard J. Stockton, said that the Braemar interest expense tripled in 2023, forcing the company to be very cautious about how it uses available cash. He said that caution will pay off Braemar in 2024. And he said, I think we're in a great position for 2024 because it looks like interest rates are coming down, and this is exactly what we need. That's it for today, and make sure to go to incomeinvestors.com now to get our free special report on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more income picks soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.